Hello, everyone. Welcome to the Money Hour Radio, a show where we try to help you grow your money, pay less taxes, and have a beautiful retirement. What could be better than that? I am one of your co-hosts, Ben Barzideh. I have my partner with me, my co-host, Matt Nadeau here.
Hey, everybody.
All right. We are both founding partners and wealth managers at Barzideh and Nadeau Wealth Management, a comprehensive financial planning firm located right here locally in Barrington and serving the greater Chicagoland area. And our fiduciary obligation to put our clients first is the tenet of our company philosophy, and it guides every decision that we make. And as an independent firm, we have truly the freedom to focus solely on you, not some corporation.
Yeah, that's important. You want independent advice. You want somebody who's not beheld to a big corporation. That's us. And of course, we always have some of our clients out there who are listening to us each and every week. We appreciate the trust you place in us, and we love every one of you. And we have a great show planned today. Of course, in the first segment, you know what we've got to talk about, Ben? The Fed.
Yes, of course. Can we go a week without talking about it?
No, we have to. But we are going to also talk about another topic that's really interesting. We're always looking for stimulus that's going to be creating this ability to drive the markets to new highs. And we're going to talk about the three different types of stimulus that's out there that is powering the markets. And then later in the show, we are going to talk about charitable giving and one of the best ways out there that you can give to charity and get some great tax benefits doing it. You don't want to miss it.
But before we start, we also encourage you to follow our BN Wealth social media pages. It's on Facebook, Instagram, and also check out our new moneyhourradio.com website. It's live, and you can access any of our previous shows on there on your favorite streaming platform. We have Spotify, YouTube, Apple, all the good stuff. And lastly, please subscribe to our weekly economic newsletter that's called the 5-Minute Market Brief. We get so many compliments on this. It's informative, succinct, and easy to read, and you can sign up at bnwealth.com. All right, let's get into our first topic this week. Matt, let's talk about this now. We got talking about the Fed.
Man, the Fed. We got to go the Fed. Let's start with our favorite, least favorite.
Least favorite.
Really, it's like, all right, come on, Mr. Jerome Powell. Every time he talks, the market just drops right after. It's like he's the doctor with the worst bedside manners. So actually, even before he spoke, there were a few other Fed people out there, Bostic and Bowman. They had mentioned that there was this increased risk in the labor market and the possibility that the Fed might already be behind the curve. That really didn't help the mood on Wall Street either.
No, and then this is how our main man, Jay Powell, soothed investors with his warm fuzzies when he started talking. As soon as Powell started to talk, volatility picked up. Basically, the market rolled right over shortly after he said the following three things. One, he said there is no risk-free policy path ahead. So that was a negative. Then Powell noted how sticky high inflation, slowing consumer spending, and labor market risks are happening. That's not good. And lastly, he went on to warn that the stock market is fairly highly valued. Thanks, Jerome.
But other than that,
come on.
You know, what else is going on? He must have had a rough day, getting a little too much grief at home or through.
He's got a tough job.
Yeah. So let's switch this up a little bit because it all does play together. But there are three separate and powerful forms of economic stimuli. So stuff that are really helping the economy. And that's why, even with these worries that Jerome Powell brought up, there has been this powering to new highs. And the three stimuli is monetary policy, fiscal, and private. And let's first talk. The Fed did cut rates. And more importantly, they signaled that there were going to be the beginning of a rate cutting cycle. And that means the first one of those, monetary stimulus, is now beginning. And then second, let's look at fiscal stimulus. And that's really been the big piece of legislation that we've talked a lot about, this one big, beautiful bill. And that solidified, it bolstered tax cuts, and it really unleashed billions in federal dollars across various industries.
So fiscal monetary you've heard of before. Let's talk about the third one that is relatively new. And we talked about it last week. We now have private stimulus occurring via the massive AI-linked capital expenditures from these major tech companies, such as the Magnificent Seven, and the others, and actually to the tune of more than $500 billion on AI infrastructure over the next 2 years. Massive amount of investments. And then this week, here's what was interesting. So AI darlings NVIDIA and OpenAI, on Monday, they announced a massive partnership where NVIDIA would invest up to $100 billion into OpenAI to fund the creation of 10 gigawatts of NVIDIA powered systems to run OpenAI's expanding AI computing power. And technology company expenditures, which investments we mean, are now almost 4.5% of the US GDP. That's massive. And there's only been one other time in history it was this high. Guess when? It was the late 1990s. So could this also be a big bubble?
I don't think anybody remembers that, right? The dot-com crash?
Some might.
Yeah. Hey, listen, here's the thing. If we think back on Monday's announcement, think about this. That's largely like NVIDIA paying one of its largest customers to build more infrastructure that will require NVIDIA chips. It's basically paying your customer to keep buying your product. And therein lies this ultimate concern with this massive AI capital expenditure. So in the late 90s, companies poured money into internet firms and were trying to build out infrastructure, but the adoption of the internet was much, much slower than predicted. And it took decades for the way the internet was envisioned to become monetized and useful. So all that investment by major firms in the late 90s turned out to be massive money losers. So that's, if we're looking at it, a primary concern for AI right now where it's at. So the question is, when will AI yield positive economic benefits for the broad business community and general population?
No doubt. And these massive investments in AI, just like we said last week, they better pay off. If not, we have big problems for the stock market. And think about concentration risk that these huge tech companies pose to your average investors who are just purchasing index funds, which they've been told are safe because they're diversified. Here's what we mean. Currently, the top 10 tech companies in the S&P 500, these Wall Street darlings that we all know about, they only account for 2% of the companies in that index, but make up over 1/3 of the market cap. So one single company by itself, NVIDIA, makes up approximately 8% of the index. So the tech sector is almost single-handedly pulling up the market all by itself and accounts for most of the gains this year. So the question is, what happens if that slows down? What happens if this AI adoption ends up being a bust like the dot-com bubble in the late 90s? And don't forget, the S&P 500 during that market crash from top to bottom went down 49%, and the NASDAQ went down a whopping 78% in that market crash.
That's, I don't think people are prepared for that kind of a drop, but that's the problem with this kind of bubble. But here's the good news. This is not a today problem, but more of maybe a down the road, a tomorrow problem. Markets are at all-time highs, but again, you've got to remember things can change and sometimes fast. So we feel while in retirement, it is paramount to have a defensive plan with your investments, a disciplined sell strategy to exit the stock market, protect your money if all of a sudden these risks explode and the volatility gets too high. And in our Advance and Protect tactical models that we manage for our clients, we have a plan of attack for both bull markets and bear markets. So if the market continues to go up, then we'll ride the trend. The trend is your friend. Let's ride this sucker. In fact, in many of our growth-oriented models, we're actually pedal to the metal with 100% in equities with no bonds right now.
However, if the market starts to get riskier and conditions start to deteriorate, we will actually get defensive by selling out of the market. We're not just going to sit there and do nothing. We'll go heavier into bonds or cash while we wait for conditions to improve. And I want to ask our listening audience this. Do you have a defensive plan to help protect your money from a potential market crash? Have you ever spoken to your financial advisor about this? Actually, do you even like your financial advisor? I swear, it seems like most people we talk to when we ask that question, they don't even like their advisor. They just don't know how to find a new one and or think it's too much work to change to a different custodian.
Hey, here's the good news. It's super easy these days to transfer from one financial institution to another. have us manage it. Just a few DocuSigns help, but there's no fees, no taxes, and only takes a few days to complete. So reach out to us online at bnwealth.com or call our office at 847-780-2980, and we can help walk you through that process. Again, bnwealth.com or call our office at 847-780-2980, and we'll go into break, but we'll be right back. Welcome back. Thank you for tuning in. This is the Money Hour Radio, a show where we try to help you grow your money, pay less taxes, and of course, have a beautiful retirement. I'm one of your hosts, Matt Nadeau. I have with me one of my co-hosts, Ben Barzideh.
Hello, everyone.
And right before break, we were talking about the Fed, some stimulus, our Advance and Protect process. And there's a lot of people that ask, how do we get to know a little bit more about your firm and about you guys? And I'll tell you, we have some exciting news. One of the easiest ways, the most painless, fun ways to get to know a little more about us is to come out to our first high-end Bordeaux wine tasting workshop. Ben, it's not Bordeaux, it's Bardo, right? Get it, our last names?
And not Bordeaux, as they say in the South.
That's right, that's right. Well, it's a fun event, and this is solely for those who've been listening to us. They're considering potentially working with us, and it's a no-pressure, fun environment where we do like a 15, 20-minute presentation on how we can help you, what makes our firm unique. And then, guess what? We're going to turn it over for some hors d'oeuvres, some of our favorite bottles from the Prisoner Wine family. And it's Thursday, October 23rd from 6 to 7:30 p.m. And it's right here locally in our office here in Barrington.
Yeah, it's very much like a cocktail reception hour, and it'll go by fast. It's not going to be something that's going to tie up your entire evening or anything, but it's a really good way to come get to know us and find out a little bit more about us in a very fun atmosphere. And again, we're going to feature the Prisoner Wine collection this time. That's one of our favorite wines. My favorite grape, by the way, is Zin. You could say I have a Zin infatuation. And one of the favorite reasons I love Prisoner is it's heavily into Zin.
Yeah, so if you're interested, go to our website at bnwealth.com. You can also go to our website, moneyhourradio.com, which just went live, moneyhourradio.com, or give our office a call, 847-780-2980. And one other big announcement, you know, our firm here, Ben and I like to talk about our company motto being do great work, have fun, and give back. And this particular segment, we're going to talk about charity, but in general, we believe that with prosperity comes charity and values supporting churches or charitable organizations that help local communities.
Therefore, we are so excited to announce that very soon we will be launching the philanthropic arm of our company. We call it BN Giving, and we don't just talk about purpose. We actually want to invest in your purpose with you. So if you become one of our clients and you're a faithful tither or a regular giver to a charity, as long as it's an official 501c3, just let us know, and we will actually match your donation up to 10% of the management fee that you pay us each year. And by working together, we can hopefully magnify our impact. And this is actually a whole new movement we are trying to pioneer here that's very unique to our firm, based around the culture of giving and really a more altruistic way of doing business. And if we can grow our client base with like-minded people, those who share our values and vision, well, that would be just incredibly rewarding to us.
And by the way, we don't want to leave those of you out who are not regular givers. We get it. That's okay too. And of course, we'd still be happy to see if we could work with you and help you.
Yeah, we don't discriminate.
Yeah, we don't discriminate. We just want to help you. And if you're a giver, we want to assist. Again, explore how you can join our tribe by becoming a client. Please reach out to us online at moneyhourradio.com or bnwealth.com. Or, of course, just call our office directly, 847-780-2980. So now let's switch it up and actually talk about one of the best ways to take advantage of this and give to charity. So if you're an investor who you're planning on giving money to a favorite church or charity, consider one of the best charitable giving strategies in the tax code. And it has to do with giving highly appreciated stock. So let's say you have highly appreciated stock in a non-retirement account. So like a brokerage account, a trust account. And in most cases, you can actually give away up to 30% of your adjusted gross income in 1 year and get a double tax advantage. So again, if you go over this adjusted gross income level, you actually don't lose that benefit. You can carry over the excess amount of your donated stock until it's all used up, as long as you get it done over the next 5 years with that 30% annual limit each year.
And to get this double tax savings, Matt, that you were talking about, here's how it works. Don't sell the appreciated stock before you donate it. Instead, gift the appreciated stock away to your church or charity. That way you'll avoid having to pay tax on all of the capital gains tax on it. And you're not actually penalizing your church or charity, because guess what? Qualified tax exempt organizations don't have to pay the tax when they sell that appreciated asset, like the stock in this example. So basically everyone is happy. You get the tax savings and the church gets a bigger donation. Hallelujah, hallelujah.
Hallelujah. That's right. I mean, anytime you get tax savings, that's great. Double tax savings, even better. And this is where it gets even better. If you held that appreciated stock for more than a year, now you're getting a second round of tax savings, which is the larger deduction you receive, since you're able to deduct the entire pre-tax value of the stock, not just what you invested into it. So gifting highly appreciated assets are a very powerful way to get these charitable giving and tax benefits. And now you can take that up a level. You can actually then incorporate this into another powerful charitable estate planning strategy, utilizing something called a charitable remainder trust, a CRT. So with a CRT, you actually get a tax deduction for the donation of the highly appreciated asset. And guess what? You can still take income from that trust while you're alive or over a certain period of time. And then the remainder amount, once the term is finished, goes to the charity. So it's super powerful.
It's a very valuable strategy. And we don't really have too much time to get into too deep into CRTs today. And we'll do a whole separate segment on that in another show. But the point is that there are some powerful strategies that can help magnify your giving and your tax deductions. But the first step is to work with an advisor who has the skill set and experience to understand these concepts. And unfortunately, I hate to be a critic of our industry, but many of the so-called advisors out there are just glorified salespeople, often just trying to pitch you some investment product that pays a big commission, like those gimmicky equity index annuities. While we are confident that by listening to our show, you will quickly come to realize that we are different in our knowledge base and integrity. It actually differentiates us from the rest of the pack. We would like an opportunity to see if we can help you. We would love to sit down with you.
Yeah, I'm sure those of you listening, and maybe you guys have received, maybe mailers or emails or listen to the radio with these equity index annuity or annuity salespeople. Here in our own office, we have to push away these wholesalers trying to come in and pitch us annuities to then sell to clients. We just don't believe in annuities for most investors. Now, there are times it could be good, but we don't do commission-based products. We don't believe in annuities for most people. So if you come to see us or work with us, you're going to find we're not trying to sell you a product. We're not trying to sell you an annuity. And in fact, you can learn more about what we do and what makes us unique by coming to one of our fun events, one that's right around the corner, October 23rd. It's our high-end Bordeaux wine tasting event. And again, it's not Bordeaux, Barzideh, Nadeau. We're trying to, I guess, be cute with it. But this is a fun event, and it's solely for people who are new, that have been listening to us and are considering learning more about us and potentially working with us. And it's a no-pressure, fun environment. You can meet us, drink some amazing wine, and we're going to go over a 15, 20-minute long presentation on what makes our firm unique and how we can help you. It will not be a pitch for any annuities. And then we'll have some food, some of our favorite bottles from the Prisoner Wine family. It'll be a great time, Thursday, October 23rd from 6 to 7:30 p.m. It's right here locally in our office in Barrington. It should be a ton of fun. To register for the event, go to moneyhourradio.com or call our office at 847-780-2980.
And if you can't come to that event, but you still want to explore potentially becoming a client of ours, contact us and schedule a complimentary consultation. We will go over your current financial picture and your goals. We will look at a variety of different things. We will look at your taxes. We will look at your investments. We will go over insurance that you have and give our insight on it. We will look at your estate plan, talk about if you need a trust or not, potentially talk about if you pass, if your assets would be subject to probate or not. So if we can help you, that's great. If not, that's okay too. We will still part as friends. And as always, you can reach us online at bnwealth.com or call our office at 847-780-2980. And then also we encourage you to follow our BN Wealth social media pages. We're on Facebook, we're on Instagram. And on there, at times, we'll have some pretty interesting updates and timely news during the week. We're also live now on our moneyhourradio.com website. That's where you can go and you can see any of our previous shows streaming on Spotify, YouTube, Apple, whatever your favorite streaming platform is. And then lastly, please subscribe to our weekly economic newsletter. It's called the 5-Minute Market Brief. It's very informative, succinct, and easy to read. And you can sign up for it on our website at bnwealth.com. All right, we are out of time. God bless you, and we will see you next week.